Hey traders, Nick here. Late in the day on 11/11, 6:30 Pacific, California time, I figured I'd slip in one more video. This one is about Upstart, a company I traded not too long ago and shared it, and it did super well. I mean, extremely well. So, what now? So I figured what I'll do is I'll just pull up my lines and update them live. I don't remember doing a video about this, at least not publicly. So I did one with the trade itself, I'm pretty sure. So let me go double check that fact. Yep. So the idea was to get long where a breakout was coming. And it was so far back, but not so far back in time. So let me show you. This is a daily chart. Let me see, 1 year's worth of data. And I haven't touched the lines in a little bit, so now some of them are out of date. Let's freshen them up. This was where I went long. It was stuck in a sideways move, and I drew this box and I said breakout line, and that's what we were chasing. And I would stop out if the opposite line is broken down. So it was trading in the box. Basically chase the breakout from the box edges. If the bottom one if the bottom one breaks, then expect more selling down there. And part of the trade was to sell puts or put spreads down here, and or buy calls or call spreads. So every trade I share has 4 different ways of getting long. 5 buying shares, of course, buying calls naked, which is not usually my favorite, but it is the fastest way to make money, but the fastest way to lose money. A more moderate way is to buy a debit call spread. Literally spreads the risk of buying a call, and or sell a put, which is my favorite, to own shares, or sell a put spread, a more moderate way of selling a put. Of course, all of them played out super well. And then it did this. So now what? Let's review the chart. So there's some things I need to take out of there. This stopping out, ridiculous. Breakout line, we'll leave it for visual to remind me when I took the trade. I'll leave those 2 boxes so I can speak to them in the future. This support zone clearly failed, so I will extend it that way. It is now a resistance zone. Not to say the wall, but if I can spell resistance correctly, it is definitely a slog to get through it. There are opportunities up there, and let's draw them out. If they get through the resistance, there are some lines that could be catalysts. This one is one of them. So I'm going to put one at 340, and I'm going to move it here to say, okay, it's going to take it some time to get there. But if indeed it gets there, it could be a breakout opportunity. I'm going to make it a small font so it's not so prominent. So nobody should expect it to go there right away. Now, buy the dip opportunity 1, we never got the chance. It down on earnings, sliced through that buying opportunity. So therefore, this becomes a place of resistance. Let me put it up there and see if I want to change it. Nope, wrong one. This one. And we'll change it to our zone. I feel like Bob Ross. Remember that? Are you old enough? We'll put a tree over here. Okay, so look at this. If I'm looking at it this way, it's a head and shoulders that lost its neckline right there. And the downside scenario of such a drop, of such a pattern, is about this much. So one would argue that this is the target measured move of this loss of a head and shoulders. So technically speaking, in hindsight, of course. Me, I'm a levels guy. So I knew that if it loses a level like this one, it would fall about that much. But we never got the chance. The earnings was a whoosh down. Pretty fantastic way. So if you're looking at it, it's like, oh my God, it just fell 40%. Yes, but it's still up 500% on the year. It's up 1,000% from last extension left. So this is going to be a resistance zone. Why? Because this was a pivot point before, so I expect them to be heated here somewhere. So on the bounce back, I expect them to slog it out, fight it out tough. And then on top of it, another wider, this one really, which should be like a little bit higher now that we have more ticks on the books since I drew it the first time. Okay, so it's right here. It's a buy the dip opportunity. That's literally what it is. Why? Because it's where they accelerated and they put down some sort of a base with a support zone below. Would I buy the dip here? Personally, I would not, and I'm not recommending any trades here, by the way. This is me updating my chart and talking it out. This is a support zone because they had some sort of a consolidation, and then to the moon, small consolidation where they are right now, to the moon, consolidation. So it is a support zone. I would wait to see the outcome of this candle. So the drop candle, the lower end of it. In fact, I'm going to put a box around it so I can visually. Yeah, so many boxes, Nick. Come on already. Well, do you want production or do you want the chart to look pretty? Now I know that I need to pay attention to the edges of that candle. So a loss of that level, 240, I'm rounding, could bring about 210. And a breach of, going through and eating away at the gap. I don't think this gap is going to fill like in big burst. I was just looking at a stock that had the same setup. I'm going to say Intel. They have a really juicy gap, but I think they're going to stall halfway through it. This one will stall halfway through it. Well, normal stocks would. This one may be on crack. I don't know. But I wouldn't go long until I see the resolution of this box. They say, well, in the long term, it doesn't matter. Well, if that's the case, so why rush into it? If it doesn't matter, a couple of bucks lower or higher don't matter, right? So what? That's a silly argument. Say in the long term, it doesn't matter. So what? You buy it here blindfolded without looking back? No way. It just doesn't make sense. Okay. Back to reality. So why is this a support zone? In my opinion, because they came arguably here and failed, here, fight it out, boom, blew up. They haven't tested it. They're going to test it. They're bounce on it. Now, if they bounce and they hit the resistances and then they fade and they fail to hold that same bounce level, they'll get to 160 or 150. What did you just say? 150? I'm like, yeah, it was right there like 3 months ago. And there's a giant gap down here. So it wouldn't be too crazy. And besides, look at this orange line. I'm going to take all my lines out. How come this line is still there, Nick? That line is not drawn by me. This is the highest point of volume that they've had in the last, whatever you're looking at, since last March. By how much? By a long shot. Look at the volume peak right there compared to the other ticks. So these two levels are super strong supports, but that's where both bulls and bears love it. What are the odds that they don't revisit it? I don't know. All you need is a little hiccup in the market. Psst, this one could trip. Nick said it's going to 160. No, Nick did not say that. Nick said he wouldn't buy this. He wouldn't get long on this dip, even though it's 40%, until he sees what happens to that candle. And then I'll follow it one line at a time. Do you think that this is a fast-moving stock, correct? Yes, that is correct. I'm glad you asked. No, seriously. But let's say it bounces. And I said there's going to be resistance. And if I'm correct, and they do this, and let's say on one bad day, the market has a hiccup for whatever reason. Some jackass politician says something wrong. This is an inverse cup and handle. I call them ladybugs. And if you lose this on the second test, you're going to whoosh down. How much? As big as this guy. So I usually look left and give it credit for support levels. And I told you where the support levels lie. But if this indeed triggers, so if they lose this, I bet they get to here. You can hold me to it. I didn't say it's going to there. The if part is important. If they lose this is almost a certainty. That's my guess. So I wouldn't go long until what? I see what happens inside this box, because this is the trigger. In fact, there. I just put the alert right there. Tell me about it when it happens. It could be an inverse cup and handle that's going to take it down to here. Now, I wouldn't short it based on that fact, but that could happen. Okay, that's it. Short and sweet. Did I finish updating the lines? No. Why not? Because I didn't represent that risk. I'm going to represent it right here. So I'm going to say, watch. I'm going to say support. It's not like I'm cussing it out. I'm merely reading lines. Oh, technical analysis is bullcrap. It's not bullcrap. I'm glad you think it, because that makes one weaker opponent on the other side. So this is support, but if lost, a new leg lower. Look where I stopped it here. I didn't say it's going down there. I just stopped it right there. I'm confident that this guy right there will play. So watch. Okay, I'm going to put it right there. What is this value? The high is 191.90 basically. I'm gonna do right there. End of the day, folks. Support major pivot. Oh my gosh. From when was that? June equals support. Okay, this is, oh, I didn't update it. 191.90. Let's see if I remember correctly. Well, that's close enough. That looks like it. Perfect. Yep. So this will visually remind me that look left, there, that's a point of contention for a long time. So it should play a supporting role on top of this. So those are my updates on this chart. Again, if I wanted to put it into words, yes, overdone, but overdone, giving back half, totally normal price action. More would be okay, but I won't do anything until I find out what happens in this box. The outcome of it, if they lose the bottom end of the box, they risk coming below 200. How about this? That's a nice way of saying it. However, they have a giant support zone in the way and a very sharp support line in the way. On the other side, the upside of the box, they have a lot of resistance to slog through. That's as fair as an assessment as I can do. Later. Oh, if you like this, give it a like. Subscribe to the channel. It's free so far.